Yo guys, what is up? Here is a little video I wanted to make for you guys. I'm going to start off by going to TradingView and opening the chart. I wanted to show you guys my pretty background because I got a Mac. I'm sure you guys will notice it, and that's not why I did that. I just accidentally started on the home screen. So let's start on the weekly time frame and start breaking this thing down. I want to say that if you guys like this video, please share, comment, subscribe to all that good stuff. I sound like a basic YouTuber right now, but if you guys like it, share it. It helps us out a lot. So I'm going to get rid of all this, and we're going to start with a fresh chart. So on here, what can we see? We can see that higher time frame, we're making higher highs and higher lows, but I'm not going to focus a ton on all of this. I'm going to focus on what's recent because that's kind of how I trade. That's how I operate. That's how I've always done things. So this is going to be top down, and it's going to be, it's not going to be super long because I'm going to show you guys the top down does not have to be painful. You just take all the ideas that you know and you apply them to all the time frames. And once you've done that, you have successfully completed top-down analysis. So let's see what we got here. So we had a doji candle here. It was untested until we had this price trade into it here. So this price trades into this doji, right? This is a pullback, a leg, pullback, and then a new leg to the downside, right? So let's adjust this. I'm just doing this to get it more precise. Sorry, those buttons popped up. I don't know how to use this thing yet. I'm like a parent with a new phone. So we mark this up, press right into that, and then we'll mark this up. And you can actually refine it to the wick because wicks typically contain the mitigation price action, because mitigation is just basically filling orders and also creating liquidity, because old points of mitigation turn into areas of liquidity. So here we can see mitigation closing these orders. So we had an up move, inefficiency, trades into it, push down. Now we trade into it a couple of times here. And if you guys notice, there was a little bit of liquidity trading up into that area, but there really wasn't a lot. So what ends up happening is we push into it once, push into it twice, generate more liquidity here in the form of these wicks. So these wicks are liquidity, and we end up running them out. We run this one out by a little bit. So we've successfully run out all the lows. And just so you guys can see, this is the last up close right here. So the up close, and then here's our break of structure. It doesn't happen until this candle because these just wick below it. So we wick below it, right? And this becomes the BOS right here. So here's our break of structure on the higher time frame. Again, we're just kind of building up our story about what price is going to do or what we think price is going to do. So let's keep building it. So you can see that this was a high, low, high, low. So I'll mark off the structure so you guys can see that as well. This is all part of building the story. So let me get one of these out of here, and then I'll go back to full screen. So you can see this. I'm just going to clone some of these. Let me get rid of this real quick. So you guys can see, did not mean to drag that as well. Get rid of this. You guys can see this is our structure. Now, where do we break this low? We don't break it here. We really break it all the way down here. So low. So you guys can see we've built up our structure narrative. We built up our supply level narrative. Looking at kind of current price, again, it was low, high, low, high, low, high, low, high, low. And what did I say happened here? So I said that we had this doji candle mitigated here, this traded into the wick. We generate liquidity in the forms of these highs, sweep them out, and have our break of structure here. So now this isn't mitigated until price breaks structure and comes to retest it. So the mitigation really just kind of happened in recent price. So You can see it right here. This is the open of that candle. Price traded right into that. Okay, so price traded right into that and ended up breaking down a little bit. But if we look closely at what's been going on, we can see that we are actually still bullish within this leg. So again, higher time frame leg, pullback leg. So this was the origin of the move right here. And you can see within this leg to the upside, we have these structural points, and I'll change the colors on them for you guys. So we'll do like a teal. So like this. And then really up here, I would not classify this as a pullback, to be honest with you guys. I mean, it could be viewed as a pullback, but I don't really think it is. I think this is one leg to the upside now. So it was, and then there's a little structure here, but I'm not going to mark it up. So it was high, low, high, low, high. And what happens? So we end up trading into this level of demand. This is a level of demand because consolidate, and you can see we ran out this low right here. So we consolidated in price, and then we ran out this low right here and then pushed higher. So this is a demand level that's not mitigated until we get the BOS to the upside here as a form of continuation. So we break structure here to the upside and continue our bullish run, right? So we continue our bullish run here, and this is a BOS, and I'll put that in. So BOS, and this is not mitigated until we break the structure and then test it. So this is kind of building our story on the weekly. This is a higher time frame movement of price. Like this. Now you would anticipate a lower low like this, right? So that's a higher time frame story, but on the lower time frames than this leg to the upside, we technically haven't broken structure because again, this is the last low that produced a high. You guys should know this if you've been watching our videos. This is the most recent low that produced a high. This low didn't really produce a high. It was this low that created it. So now price trades into that. And if I go to the daily, let's start breaking down the daily a little bit. So on the daily, things become a little bit trickier, to be honest with you, because this could be viewed as a pullback, a high, a BOS, and then a push lower. But from a weekly perspective, you guys can see this wicked out these equal lows right here. So wicked out these lows here, low, low, take them out. And then we ended up trading into this right here. So we ended up trading into this right here. Let me drag this over. So we trade into this here, this demand candle, because it's run, consolidate, run, imbalance. So that's what we traded into. And now prices come all the way down into this, right? So it traded into this little area of interest for us. And then here is our structure. This was just one ginormous leg to the downside. And honestly, it looks like if we want to pull a 78.6, it will most likely be pretty close to where we reversed. Not super close, but pretty good. You guys can see that we had consolidation, right? So we had a consolidated period in price right here that led to that explosive push to the downside. So we had that explosive push to the downside, right, after this consolidated period. Now let's look at the structure that we had here. So the structure that we had within this corrective leg to the downside really isn't too difficult to see. We're obviously creating lower highs and lower lows. So again, I'll change the color here. So we had like, let's think about where we want to start. You don't have to look at all this ugliness. That's just ugly. Focus on recent price action and what that's been showing you. So we'll do orange. So high, low, high, low, high, maintained. The wick doesn't trade above. You could argue there were little retracements here, but this is a low, high, pullback, low. This was definitely a break of structure here. It's a little bit tricky to see, but it was a low, slight pullback that ran the highs and a push lower. Now what do we have here? We have an area of unmitigated demand that tested this higher time frame POI and caused a break of structure. So price really ought to trade down into here. So we've personally been looking at this area at Aerial FX because again, we did have this break of structure after trading into this higher time frame POI. So here is our break of structure here. We trade above it and clearly close above it. It's not just a little wick past an impulsive close down. We did close above that level. So hit a break of structure here. And now we need to trade into this demand. Now dropping down to the 4-hour time frames, what do we see within this leg? So within this leg, this corrective leg, it has simply been maintaining structure. Here was the lower time frame pushes right here. So lower time frame pushes, we grab a hold of this. So move this over so it's nice and pretty for you guys. I'll adjust this again. Here is our area of interest right within here. Price barely missed it, grabbing all of these lows here, likely just leading to some enticing people to buy up like off of this or somewhere down here. Doesn't really matter how you think of it, but let's look at the structure that we had going on here. So we had high. Now let me change the color on this purple. So this is a high that produced this low. We break above it here, create a higher high, higher low, higher high, higher low, high, low, high. So after we create this impulsive leg to the upside, we break structure right here because the first body closure below this wick occurs right here. So this is the low, high. This is kind of ugly. I'm going to simplify it to this: low, high, low, high, low. Now, where do we get a break of structure? Where do we trade below this? We trade below it here. And where's the structural high? It's the deepest part in the retracement within this leg. So the high that produced the low, you could argue was in here. You could also say it was. It doesn't really matter how you look at it. It's just, technically speaking, whenever you break the low, in the case of a downtrend like this, lower highs and lower lows, the lower high is the highest point within the pullback within the previous leg. So this is the previous leg to the downside. You pull back, create a new leg, and then you look, okay, within the previous leg. So this is the new leg to the downside, right? Because you break the low here to continue. So this is leg within the previous leg. Where's the deepest pullback? It's here. So this is, like I said, this is the structural high. Then it creates this low here, right? So now we've been maintaining this and we still have this area of interest to trade into. And notice how there wasn't any liquidity above this. So what do you guys think that means for this? This will just be a point of liquidity. We will likely end up, taking this out, or we'll likely take this level out. So now we'll go to the 30-minute. We'll start building a story or a case for why we should short off. So let's see. I said this was in. So these points are obviously the structural points. for the 4 hour. I just marked them up for you guys. Let's see why they worked out. So I've been following this PA for quite some time now. Let's see what happened. I actually want to get rid of this real quick, or I can just adjust it. So you can see this here was the origin of this move to the downside. So price trades all the way back up into that. What do we do? When we get into those regions, they didn't have any previous liquidity. So what do? We generate liquidity in the form of this high here. And then we take it out, breaking structure here. We don't create a new low, but what ends up happening like this here, I actually remember this. So looking at this price, this was high, low. Now we would expect a lower low. So we trade all the way up into here. We'd expect a push for a lower low, but this demand ends up holding. Why does this demand end up holding? This demand ends up holding so we can create more liquidity at this point in price. So we'd expect a lower low. We don't get it. Why? Because price is creating liquidity in the form of this low. And then when we get a pullback, where do we get it? We get that pullback all the way up into the origin of this leg right here. So we get a pullback all the way up into this leg here, and then we push down strongly, really clear mitigation, and we end up creating that lower low, kind of anticipating. What do you guys see? This did not end up holding, right? So you guys can see this ended up holding just a form of liquidity. And mind you, we also had a lot of equal lows. So now this mitigated right in here. This mitigated this. Here's liquidity. This mitigated this candle. Now we actually ended up sending a signal out from this level right in here. So this was the mitigation of this supply right here. So mitigation here, right? You guys can clearly see that. So we mitigate it here, and this is so leg pullback, and within this pullback, what's our structure looking like? So this is like complete multi-time frame analysis. I hope you guys are following along right here. So high, low, now high, low, high, pullback, low, high, and then what ends up happening here. So let's talk about this. So price trades into the supply, doesn't end up breaking structure here. And it's important to react to this because you could have been married to your bias of shorts, right? You could have been married to your bias of trying to sell this out or sell this down, sorry. Could have been married to that bias, but what ended up happening was a run on liquidity for a deeper pullback to actually mitigate this. So what do? We create forms of liquidity, and let me move this over. So this mitigated this here. Now it would have been great if this had pushed down and closed lower than this on the higher time frames, but it's a big liquidity grab to push us all the way back up. And where do we trade into? We trade into this wick here. So now we're really working at a current price. And what ends up happening when we get all the way up here? So when we get all the way up here, we go to like the 15-minute, what do you guys notice? We generate liquidity in the form of a high. We have liquidity here in the form of highs. We run them out, and then we finally get a BOS here. Right, so this was a failed BOS because the body didn't close below. This is a very clear, impulsive close below, nice, solid push, right? So what ends up happening here? So within this is the entire leg to the downside. Now, where were your supply levels? You could have had a few. You're looking at a few at Aerial FX. So this is the first one right here. Ended up trading through it, really ugly consolidated price action all within here. Now, where was the next one? For me, the next one was, and still is, it's on the 7-minute. It's right here. So 7-minute time frame. You can see within this leg, this is rather deep. This is a pretty steep retracement up into this level. This is not asking a lot, but this is a reasonable level. You can see if we pull our fib, it probably lines up nicely. Yes, it does. So it lines up nicely with the 78.6% retracement right here. So this could be a really good level to look for shorts at. It could be a good level to look for shorts at. So within here, you can see a couple things. You can see equal highs swept out right here. And then this was a 1-minute candle that wicked all the way up into here. So this is a 1 minute, swept the highs. And now we are trading into it. And it looks like, I mean, we're just generating a lot of liquidity. That's what ends up happening with these mitigation trades is, like I said earlier, mitigation is switching the money. So the banks are switching their funds whenever you see these mitigation trades, but they're also building liquidity, because when price trades into these, it's kind of making it to where there's like no demand left. Like there's no demand, right? Within here, from here to here, this was mitigated. So what the banks are doing is they're mitigating price like this. So they mitigate here, and now they're coming down to mitigate here, and it's a matter of this holding or not. But what this is there's no demand here. There's no demand in here. It's all mitigated. There's demand down here. But the deal is if we break the structure, so again, we're looking at structure on every time frame. I'll just mark it off with this. So if you look at structure, like this. So if we break this low here, and we break this low here, we'll have a break of structure within a POI, and we should be good to short off. So that is an extremely complete breakdown on AUD/USD, and this is how to do proper top-down analysis. I hope you guys enjoyed this video. If you did, drop a like, comment, all that good stuff that I already talked about. But yeah, I hope you guys really enjoyed this video. Yeah, if you did, share it, obviously. If not, that's cool. I hope you guys find something out of this stuff. So anyways, we'll talk to you all later. I hope you guys enjoyed. Bye, guys.